Welcome to StockMarketFunding.com. Earnings season is going to start in full bloom on Monday. Today is Sunday at 6:22 a.m. Pacific Standard Time, and I have a daily chart here of the Dow, and basically from this very point of view is that these are daily moving averages and whatnot, and that 50-day moving average is crossed over the 200-day. It's very bearish from that. Another thing is we did not recover from this last cycle down, is that falling MACD contributed to this weakness here. And then when we hit the bottom of that indicator, we were ascending up toward the top, and we had a percent DS crossover as well that provided this rally momentum right here, right up to the 200-day simple moving average, with a very key triple top daily reversal right here. Here it is. That's the rally. This is the ascending MACD. When this goes mathematically to the right in that direction, that's how you get that move there. We came right up here to a buy signal. We came right here to the green line on a daily chart on a percent DS, and it was what we would refer to as a triple top. Notice that the daily down bar on Friday took out that 50-day moving average, which is that white line. It also is starting to undercut the 10-day, the 20-day, not only that, the 40-day moving average, which is below that. That's this other line right here. That's a blue line. Is that key reversal was a sell through on these daily moving averages. Now on the monthly chart, which is much more sophisticated, is that back over here in 1996 we were at 5,000 Dow. Now why could we go to 5,000 Dow forward looking? Number one, the earnings are good. The stimulances have worked. On a monthly chart, we got totally oversold down here in a bear market. This is a monthly MACD. And when we started to run the course to go higher here, that's what provided that move. That's where your strength came in. However, let me just caution people about one thing. The current economic environment, forward looking, is not good. There are a lot of reasons why the Dow can go to 5,000 down here, and let me tell you what those are. Number one, if the tax cuts come off in 2011, you're going to be raising taxes in a failing economy already. That means that all the stimulants that the US government did down here at the bottom of 7,000, and those stimulants have worked all the way up here to recent, is that we've hit a peak in the stimulants, and as stimulants wear off, the problem is there isn't anything to support anything. So that's your common weakness, which is quite par for the course. However, this current policies that are being made by the administration is that the deficit. Let's start with deficit and jobs. Why could the Dow go down here? Because we're not going to be paying down our deficit. We're going to be raising taxes against the American public. 50% of small businesses are suffering and continue to suffer. We have told this to people even going back as far as 2007, 2008, when we were short the market. We have all the blogs there and all of our trades that we were doing, is that we ran this course, and we have a lot of monthly selling that came in right here at 11,000, and basically right here on the Dow on this monthly chart is that we still have what we call a 10,000 Dow 500, which is half of that SMF Pro Trader monthly Pro Trader bar. And the problem that we have here is that blue line, which is this right here, referred to as that 10-month moving average, which is still flat. However, the market's upside resistances remain here. And that big monthly engulfing sell bar, just to give you an idea, that's probably, I believe it's about 1,000. Well, the low was 97.74 and the high was 11,177.67. So that was the high, 11,177.67, and your low of that bar is 97.74.48. Well, that sounds like a huge haircut. That was a lot of selling. There was some capitulation in there. Things happen for a reason, my friends. And let me tell you, the blue line, the 10-month moving average, is sell into resistance. And we are also going into a major earnings season for July. And that July earnings season of 210, tomorrow being July 19th, and we're going to be in the bulk of these earnings. Here at StockMarketPunding.com, we said that earnings are going to be quite well, but that we would be selling short using put options because of the uncertainty, the things that are going on in other parts of the world, but more importantly is what's going on in the U.S. Now let me show you why. Looking forward over the next year or two, but particularly in 2011, and the only way that this is not going to happen, it is avoidable, but this is the last low. The upside of the market is very limited. The downside of the market is huge, meaning that when I look at how I'm going to get up here and where I could go down in here again, so where I'm currently at, I've got a lot of risk down to here, and my upside is very limited into this resistance, half of that monthly SMF Pro Trader bar. But let's talk about US. If they raise those taxes, you will see a Dow 5,000, I guarantee it. Because with the new FINRA bill, higher taxes, remember that the 15-year prosperity that we had in this country goes all the way back over here. And we had a long-term prosperity plan that came into play that helped also ignite that bull market that we had up until year 2000. That was from here to there. And that's because the tax situation was the right kind of tax formula that would stimulate